The most insane stage of the bull market is potentially here. We've been discussing this on the channel now for years, looking at the 18-year real estate and economic cycle, looking at the Bitcoin cycle, and also stock market and commodity cycle. Now, when we put all of this together, with all of these cycles coming to a head at the same time, this is where things can get absolutely wild. Now, you may have been following us looking at the Elliott wave structure that is beginning to break out into wave 3 of 3, which is basically the longest and the strongest part of the wave. That, on top of our other price and time analysis coming together, suggests that things could get a little bit crazier. So I want to discuss that craziness, hopefully be able to keep our heads about us, and of course profit as best as we can from the markets. If you're new here, hit the subscribe button. It's your home of macro cycle analysis. Now, we have lots to get through, so hit that like button as well if you're enjoying the content. I want to start with some bull market quotes here just to put things into perspective. Now, when we're at the lows, I like to hype things up a bit because I think there is really good opportunities to be buying at lows. And I continue to follow this through cycle after cycle, as I told you about earlier. Now, when it gets to the highs, yes, let's keep making profits. Let's keep putting money where it needs to go, being cautious with our money, and then taking those profits as well. That's what I think differs this channel to other channels that you'll see in finance, where they're essentially telling people to go ham at the peaks. Now, this bull market has been going up for a very, very long time. We're into our 32nd month of the bull market. The previous bull markets have lasted around 35 to 37 months. So we're essentially in that final 10 to 20% of the time. Now, this is just going back through history. And when we get to these stages of talking about history, a lot of comments come up and quotes come up. And people say that this time can be different. So I thought it would be important to discuss a few of these from the absolute greats of the game that have traded, invested, talked about the economy, written books about it. First quote here is from Adam Smith. When prices go up enough, everybody believes something, as we do with altcoins is a pretty great example, and even in stocks with AI is a pretty decent example too, even if it is only that everybody else is just about to believe. That's from Adam Smith in The Money Game. If you haven't read it, give it a read. The top of a bull market, the only time people will believe in a repeal of common sense. We 100% get that every single time. For whatever reason, that happens to humanity. If it trades like a bull market, it's a bull market. So we've been in a bull market, and we've been talking about this for years on the channel, looking at it from the lows of 2022, the lows in 2023, and then as this market continued to put in hundreds of % return in a matter of a few short months, 200% 6 months, and then the other move from August to the top, that was around 120% in 5 months. So I only say this because of the emotional side of the game, not from the point of the view that, look, we get things right. We get things right and we get things wrong as well. But it's from the emotional and the psychological point of view as we get into these bull market peaks. And we're beginning to see this yet again. Bull markets ignore bad news. We've seen that with the stock markets in the case of, say, tariffs or war. I had a lot of comments from people saying that this time is different. We've got this war from Iran and Israel. It's bombing each other. And it wasn't. The stock market went higher. Bull markets can obscure mathematical laws, but they cannot repeal them. And the longer the bull market lasts, the more severely investors will be affected with amnesia. After 5 years or so, we started in 22 from one of the cycles, and of course the 18-year cycle has been going since 2009 through to 2012 around those lows. So after 5 years or so, many people no longer believe that bear markets are possible. That's Benjamin Graham, and that is who Warren Buffett quotes, having read his book back almost 100 years ago. I suspect if you're still here at this stage of the video, you're probably one of the more serious traders or investors looking for real information, and hopefully I can provide you with that. Take it away and improve on it yourself. Add it into your own trading plans and investing plans. And if you do want to take it further, check out our reports coming out 3 times weekly. Now, our daily videos cover many detailed charts, data, indicators, and our forte, the cycle analysis, to help guide us through the investment cycle. So if you're a brand new subscriber to the channel, then I highly encourage you to get our weekly reports on Bitcoin, altcoins, and the economy, including the real estate cycle. They're easy to read in under 5 minutes each, making them extremely digestible for all investor levels. There are 3 reports coming your way starting your week from Tuesday. It'll get you up to speed on how we forecast the markets and how we've been able to profit during uncertain times leading into and out of the cycle peak. It's completely free, so subscribe today using the link in the top of the video description and you'll receive your first report shortly. Now, in today's video, we're going to update all of the bull market blow-off tops that I've discussed in the intro. In particular, Bitcoin, stock markets, real estate and the economy, metals, and altcoins, the old when is altcoin season. So I'm going to start with the total 3 market cap and look at how this has continued to extend into the most insane move of the cycle that we are in, that wave 3 of 3 that we've discussed. I'll get to that in just a moment. But this is the total 3 market cap. We've come back to retest previous old all-time highs. That's going from 2024 and also the previous cycle all-time highs back in April 21, and then those peaks of October, November, and then of course collapsed in December of 2021. And we're looking at closing out one of the highest weekly closes in history for the total market cap. So this includes everything: Bitcoin, stablecoins, and altcoins. That's why this chart is really important. Now, I've also got some price ranges on the chart, some price extensions. The first being the first part of the cycle. So this is looking at some price targets to assess whether we see any sort of resistance should we get there. So overall, looking at the bullish nature of the market, being that we've got new all-time high prices, very late stage of the cycle. Yes, I talked about some quotes here to just put us in that frame of mind that things are going up, still bullish, don't worry about it in that sense. But when things get crazy, then remember the late greats of the markets. Okay, so the first target is at $3.7 trillion. I'm just going to round the numbers for ease. And we've hit that before, a dead-on 100% repeat of the ranges projected off the lows. The next number above this is 4.7 trillion. So of course, there's a nice psychological level at $4 trillion. So this is the total market cap for everything that I've just discussed: Bitcoin, stablecoins, and altcoins. And then I'm looking at an extension here up to around 150% of this range projected off that low, because it's been working very, very well throughout the market. And this is part of the analysis that we use to project price targets, support and resistance levels as well. And the next range we're looking at is the 2022 to 2024 range, that 50% level, which is often can be a resistance level, comes in at 3.8 trillion. So very close to the market action right now, about, if I get the numbers right, 100 billion off that level. Further up, looking at around $5.3 trillion. So we have 3.8, 4 trillion is a psychological, 4.7, and then 5 and 5.3. Couple of the numbers just to focus on first are these ones, and then a move to 4.7 trillion. So they're the first areas that I'm watching in case we run to those levels within the time frame of the bull market. Speaking of time frames, we're in the 32nd month of this bull market. The previous cycles ran 35 months. That's what this number is here, the low to the absolute top of the game. Every time at those tops, reflecting back on the quotes discussed here, suggests that we could really be getting close to those peaks when people go absolutely nuts thinking it's changed. Microstrategy's changed the game, AI's changed the game, the US government's changed the game, something has changed the game. That's usually what happens at those peaks, and it needs to be bigger each cycle in order to get more and more money into the game. You can't have the same narrative that happened in 2013 or 2017 repeat in this cycle to then push the price higher. It mathematically won't work, psychologically doesn't work. You can't take the market from a $20,000 all-time high, which was Bitcoin in 2017, to over $200,000 in this cycle with the same sort of narrative. It's got to be something bigger. And in this cycle, we pretty much have, I think, the biggest narratives of all time. Institutions are buying, hedge funds are buying, family offices are getting in heavy, governments are getting in heavy around the world, or beginning to, or talking about it. And we really do need those massive, massive narratives to push this price a lot further than the mind can expect. And I think this is potentially the start of something crazy. Now, the timeframes you can see with 35 months to the peak, 35 months low to the high, and then the prior cycle, which was absolutely mental in terms of profits or gains, 37 months to the high. So none of this stuff has to be exact, but it's important to watch those timeframes. And it was very important, if you were here even 12 months ago, that we were saying that it was probably unlikely that the cycle was over through the middle of, or even early 2024 and mid 24, because we were nowhere near it. We were only 16 to 20 odd months into the cycle. And it seemed like it was unlikely, especially when you base it on the 18-year cycle as well, where we have further to go into these peaks. So if this is all new to you, I totally get it. It can be a little bit overwhelming. Stick with it and we'll go through it in further detail. So time frame wise, 5 months from now until the end would take us to roughly around December. And so we have a couple of time frames. We're watching late Q3, obviously a time frame in Q4 because it's happened every other time. We'd be stupid not to be looking at some time in Q4. We can see November and December have been very strong peaks in the cycle. And then in this case, maybe early Q1, sometime that January, February point for any sort of extended run that we may see, which still wouldn't put things out of question, as that would only take it out to 38 or 39 months. So still well within the total time frame and giving any sort of allowances to either side of the end of the cycle. So as we sit, 32 months, everything's still looking good for a right translated cycle. Now the Elliott wave pattern is the real interesting one here. This was put up by Michael, my brother. You can find his details in the video description, X and on YouTube. This was in January, so almost exactly 7 months ago, but we've been talking about this for years. And the wave 3 of 3. So there is the big 3 number here. You can see other 3s as well. That's got a little bit of writing here if you can stick with it. You got the other 3 here. So wave 3 of 5, which is the end, can be one of the strongest moves that we see. And you can look back at any of the wave 3s, they're pretty strong runs. So the last one we saw in this cycle, going from 2 to 3 up here, 2023 to 2024, that wave 3 so far has been extremely strong. Wave 3 has to be bigger than wave 1, and it has been. Wave 5 can be roughly around the same as 3 or larger, especially in commodity cycles, which we're classifying Bitcoin as a commodity here. Most people do, I think, at this stage. It was money. Now we're talking about it being commodity like gold. But wave 5's at the end, looking at 5 of 5 of 5, the cycles within cycles, the waves within waves, can be one of the longest and biggest moves as well. And an update to that, here we are, total market cap. We're into this wave 3 of 3, and we'll have another update to this. So make sure you subscribe to the channel and the X accounts as well. We're into this wave 3, which is about to take out the all-time high. So here you can see it with just a few bucks off taking out the all-time high. By the time you watch this video, the weekly close should have occurred, if not very close. And provided it doesn't close below the previous highs of roughly around 112,000, then we now have another new all-time high weekly close, and above 115,000 would be above the 7-year resistance level. And that's what we want to see when markets begin to break out, closing above resistance, not testing them and coming back underneath, because that is a weak sign, like we saw in 2021, like we even saw recently with the inauguration on 20th of January. Look at that big move higher. If you guys like your candles, you can see how it runs up and then closes underneath. So although I'm giving you the analysis at the same time, also trying to teach as best as I can, where you can then use this for your own trading and investing, when you see these signs, avoid the market sentiment and the hype. The hype from the inauguration day, ridiculous. The bar gave us other signals. So here we are, new all-time high closes, new all-time high prices, and above resistance levels, and with some volume in the background compared to what we have previously seen in the last several trading sessions. So all good news even on the short term and the long term. Same sort of thing here with the analysis. Now you can use this across any other market, so it is universal. Here's Microstrategy, which has closed out its all-time high weekly close at $434. Now I've said for weeks that it is in a much stronger position. Microstrategy is in a stronger position than what it was in its previous cycle, although I'm still slightly skeptical of the movement here. it is looking much stronger. It hasn't taken out its all-time high price yet, but this is a good sign moving towards taking out those all-time highs. So technically, much stronger than 2021. This time, stronger, and it could be taking out those highs. And so when I think about that, that could start to add to the narrative that this time is different as well, that MicroStrategy has somehow rigged the game to never go down. Now, if you have your wits about you and you're trading this, you'll understand that that means follow the trend. That does not mean that it's the time to sell out. The trend is up, it's breaking to new highs, it's taking out highs, it's closing above highs. That suggests there is further upside to go. Now, when we look at the 18-year cycle, we've still got further upside to go. The 18-year cycle is a reflection of the US real estate, land and economic backdrop and the strength of it. 18 years total, 14 years up, 4 years down, roughly speaking. Of course, these are quite long cycles in the second half and the winner's curse at this peak. So blow off tops, new all-time highs, leading into peaks of cycles, crazy mania stages, narratives of things like, of course, AI is obviously the big one. And then I suspect we'll start to hear things that this time is different as well. So all things considered, trends are up, markets are up. We're still seeing further upside here. But of course, just have those cautious hats on. There's still time left in the cycle. And the red line you can see here, this is basically the fractal of the dot-com boom and bust. Put it in the log, you can see just trending straight up. And if I throw it back into log here, you can see we're doing something similar now with the NASDAQ just running straight up. And in a previous video, I discussed the market coming back after those moves higher, coming back to check itself. Basically, the bulls and the bears checking themselves, running up, pulling back to test some of those levels, running up, pulling back to test the previous highs, running up, pulling back. You get the idea. And when the market stops checking, then we go into those overdrive moves. And from those overdrives, that's when things go wrong. There's no more checking of sellers and buyers coming back in. Everyone is a flippin' buyer. And that's what leads to these really, really huge moves to the upside. And we're beginning, I think, to get into that stage after this last check of the previous all-time highs on the back of the tariff news. So again, new all-time highs, prices running up. We've got extreme greed in the sentiment for the S&P 500. The US dollar also holding ground here. I suspect we're going to see further downside over the coming months, but for now, things are looking like they're forgetting about the problems with the US dollar and with the bonds and the yields that I think might lead to bigger corrections later in the cycle. But for now, prices are slightly trending up. The multi-year bull market has continued in the last trading day for silver, running amok here at nearly 4% on the day. That's pretty good for some of the alts, even for Bitcoin 4%. We're seeing it in silver run those highs. And I chuck it back onto the monthly chart, we're getting close to a new 14-year monthly closing high price. The all-time high sits at nearly $50 an ounce, currently at $39 an ounce. And I talked about this on the channel, looking back quite a few videos, somewhere around here, looking at the multi-year bull market that no one is watching. And I think we're beginning to see that play out here. Previous moves that silver's done from these lows to the highs, you can see it run up 75% before it had a couple of months pullback, and then another move into that final peak, it ran up 90%. However, just like crypto, it can do massive swings. 40% against you, 60% against you before it runs into those highs. Silver is on par with Bitcoin, 2.2 trillion, 2.3 trillion. So it has the market cap that people can invest in it, funds can invest in it, but it still has quite strong volatility. So bigger downsides and also bigger upsides. Gold, on the other hand, way up at these highs here at $22 trillion. So 10 times the amount, the market cap of silver. Now, the other markets around the world that are hitting new all-time highs in this blow-off tops phase, wave 5 of 5 or wave 3 of 3, into that wave 5, I should say, of the Elliott waves, into the end stage of the cycle. You can see around the globe, the DAX, so this is the German market, one of the biggest economies in the world. I know a lot of people tend to not look at things that go on around the world, but in terms of other stock markets, and it's all focused on the US. But I think it's also important to see how some of the trading partners are also working out here, especially with the tariffs that have been discussed quite often. Germany, new all-time highs on a monthly chart here, could potentially be a new all-time high monthly close. This was the previous cycle tops of the 18-year cycle, 1999 and 2000, and there it is in 2007 before the GFC. Ran to new highs and continue to put in new all-time highs. So that very much looks like a blow-off top in the process. And the UK, obviously one of the big trading partners as well, new all-time high prices, even though there's a lot of negativity going on around the UK economy and cost of living. For whatever reason, this is the stock market. Stock markets are at new all-time highs, potentially ramping up even further here. So we get to crypto, looking at the 90 days in sentiment with Bitcoin and cryptocurrencies. We had a big move up here for BTC into those highs there of July 11th, 99. That's the biggest move in the last 90 days. Crypto, it is coming through. And the last 12 months, we're also seeing reasonably good signs here. Bitcoin on the way up again, taking out some of the previous highs, not back at where it was in November when it broke out into those new all-time highs, but it's on the right trajectory. And for the 5-month look at the sentiment, that's nice. We're seeing the base get formed here. You got 19 on the sentiment, so that's June, July, and we're also 19 back in April. So good news that it is beginning to get searched more again. We're seeing new all-time high prices, so it's still a little early in this whole blow-off top phase. And for crypto, it's also found its low here at 8, now trading around 10. So this is on the market sentiment. In terms of the volume that's coming into the market, so people are searching it, that's what we look for there with the sentiment. Volume has also crept higher after basing around 29 to 30 billion, very similar to what happened in mid 2024. In a similar time, there's July around 31 billion, August dropped off again to 28, 29, 30, and here we are finding our base now at 28 to 29, pushing higher to 44, taking out those previous highs. So even more money is coming back into the space that you can see here. The liquidations from last week did hit that $1 billion, and in the last 24 hours hasn't been as much. We have seen shorts get liquidated as Bitcoin has pushed higher, you can see here, but as a total, roughly around a quarter billion. So for the crypto markets, this is another massive week for the breakdown of the dominance. This has been a major player that we've been following on the channel for suggesting that we could see a big hopium move to the upside for Bitcoin and cryptos. So what I've been talking about is the dominance as it breaks down to this zone between 4.4, 3.7. This, yes, we're going to see altcoins move, but this period is probably mostly going to favor Bitcoin. And so far, that's what we've seen. If we can get a breakdown of 3.7%, I think that could potentially favor altcoins even more. The only flip side to this is if it holds up here, if we get moves down to 3.7 and then it does what it did through November to January, basically go sideways, some of that money might come out of Bitcoin into altcoins, and that's where you'll see that altcoin season where everyone thinks it's game on. But I think if this thing holds up again, that is your warning. I'm not trying to fill you with 100% hopium, because at the end of the day, the markets are going to do what they do. They're going to go up, they're going to go down. We're just trying to figure out what is the most likely chance that they've got further to go, or if that move is over, especially when we start to see some of the ridiculousness that comes in these markets when people believe that something else is happening. If they start believing that something else is happening and you see this do this, right? You see the USDT dominance go sideways like it did through Q4 of 2024, then that might be one of the warning signs to suggest that it might not occur like they all want it to. If it breaks down from 3.7, boom, we're on. We'd probably see altcoins moving even further, start to break some of their all-time highs. So we need to see a lot of that money come out of USDT dominance and into cryptocurrencies because of the extent of these market caps across the board. So we're getting into this hopium and warning phase here. This is the lowest close for the USDT dominance that we've seen since Bitcoin hit its January all-time high price. You can see that was the all-time high, and then the dominance took over for USDT, and it looks like we're coming back down. So this could be good things for the altcoin market. And this is the altcoin market here in white, coming up to resistance at around $700 billion. At the same time, Bitcoin dominance is also falling. That's a big one that's getting everyone excited that the dominance is coming down. This particular one excludes stablecoins. So you're going to get a different reading on the dominance side here, sitting at around 69% dominance, of course, excluding stablecoins. And what we want to see is a bigger range to the downside than what we've seen previously. And this range was about 4%. So if we see a larger range, that could then start to sway things in favor of altcoins as opposed to just another correction on the dominance before it starts to trend higher. The others chart, this is all the altcoins excluding the top 10, which also includes the stablecoins, is also trending higher, just taking out a few of these highs and is getting close to that 8% level. That's been a key level that we've been following on the channel that could get us to the overbalance in time and price for altcoins. We've got to the time phase so far, but we need to get to the price. The timing has hit. We're at 21 days, whereas the previous move, low to high, and this is for the short term, was only 5 days. So it was 5 days up to get to 1.22. So we need to get to roughly 8%, which would then get us to 1.23, overbalancing the time and the price to the upside, meaning there are more people coming back. And then we can start to work on the larger rallies in altcoins to get it back to a bigger move. So if it happens to just rally up here and then fail again, that's a warning sign that we might see further downside in altcoins before a turnaround. So keep those levels on your chart, roughly around 8% here. In the meantime, there are a few altcoins that are heading higher. The fourth highest close here for XRP, breaking the 50% last week, taking out those previous tops here at $2.60. 20 minutes time, or maybe by the time you're watching this, we probably have the fourth highest weekly close in history. So that's doing relatively well. In terms of the altcoin against its Bitcoin chart, it's also started to rally up and it's taken out that level at roughly 2160, 2170 Satoshi. So that's a good start. Ideally, needs to get back above and take out these highs because XRP versus Bitcoin has basically been rejected at around 3,300 Satoshis now, going back about 5 years. So a lot of work to do for the XRP BTC, but if that happens, then we start to look to the next resistance levels. ETH has also been doing relatively well. Could be a very strong close here for the week. Ideally above 2,900 is going to solidify the first stages of a recovery above that level. We had the resistance at 2,900 has been the big level that I've been watching now for basically a stronger flip in the trend, and we potentially have that first week coming up. Also, Solana and Sui. But first, a quick reminder that the reports are coming out this week. Free reports, link in the top of the video description. You'll get those every single week. Sui closing above 50% here. A few minutes to go, $3.30. So it is on the move, but $4. Really nice key level here if it can start to consolidate there. So far, higher highs, higher lows, volume coming in on the green moves. That's looking okay. Solana, $161 above the 50%, also looking all right. But out of the three, meaning XRP, Sui, and Sol, Sui and XRP looking stronger, Sol looking third strongest, put it that way. And I've got hype here, the big one. New all-time highs, new all-time high weekly closes, new all-time high daily closes, new all-time high prices sitting at $49. So the strongest out of the four of those with the least resistance overhead generally should be doing the easiest moves to the upside. So that's a massive look at the update over the last 48 hours. The wave 3 of 3 is potentially very much in front of us, especially with these overhead resistance levels getting broken out of for the first time ever on the weekly chart, the daily charts, coming up for the S&P and for the metals market. So lots of interesting stuff that could basically take the breath of the market away, but don't be silly. Think about what has come before us for decades upon decades. Ride with it. Enjoy the ride, and I'll see you guys back here at the next video. Thanks again. Till then, take care and peace out.